Hi, this is Sai Morton with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the forexbsummit.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit forexbsummit.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, today again we'll take a look at the euro currency. So you probably could see the dramatic action that we have seen yesterday. So it's actually the thing that we have talked about. We said that it's better to stay aside from the market at least for the 2-3 sessions and let market to come down a bit to come to some conclusion on the results of the elections. But still, although we have said that in long-term perspective we think that Trump victory will be a bit negative for United States dollar. Some people ask us on the forum that well, you said that it will be negative, but you can see that dollar has increased in value and euro has dropped significantly yesterday. So our answer is that as I posted on the forum, that Trump is not the president yet, so the inauguration will be only in January. And he would like to get the result of this, his presidency within the just few 4-hour candles. So when we speak on the results of the Trump presidency, we mean that we will see it in the long-term perspective on the monthly chart. We should see the changes in the global trends. But right now, guys, nobody knows nothing. So the one thing that we could say that Trump should know how to make money. And from that standpoint, probably he's better, he's more confident than Obama. And probably he knows better what the economy really needs and what should be done. And at least you know his reforms and planning reforms on the taxation and some other issues. And Obamacare is canceling this program. Will save a lot of money for the taxpayers. So that's why currently it's too early to make any conclusions, and even more to expect some real results with the one daily candle on the whole Trump presidency. So it's just a short-term emotional reactions that reflects the fears and hopes of the traders, maybe just speculative games. That's why you should not pay too much attention to the really action that we have seen in just one session. That's why, guys, as swings on the intraday charts, on the daily charts are really very long, very significant, we will take a look today at the weekly chart. Besides, on the weekly chart, we could get the real background for a common couple of weeks for trading. Take a look at this picture and you probably will understand by yourself. First of all, you can see that market has failed to break through this crossing of the trend lines. That is the huge, some kind of the triangle is forming or something of that sort. And market on this upward action has failed to pass through it. As a result, we have two patterns, potential patterns by the end of the week. We will get the confirmation. One pattern is based on the Judd-Napoli framework, and you can see this huge weekly bearish grabber. This market has tested the MACD predictor line and dropped lower. This grabber has not really far going target, stands at just taken out of these lows. But this could lead to the chain reaction of the further continuation if market will take it out on 108 lows. We have discussed this previously. That's the first moment. Second moment, market we've got the huge reversal candle. Because take a look, market has opened here, moved above the top of the previous week, and right now it stands below the lows of the same week. So it moves above the top and has the chance to close below the lows. So it totally engulfs the previous week and is some kind of the reversal. This is also will be bearish. This could become the background for our trading in the coming week. So it means that right now market keeps previous direction, previous trend. Market has failed to return back and stay inside of the previous consolidation. Market has failed to break these lines and turn to the downside again. That's why it seems that the bearish trend and bearish sentiment on the market still stands intact. That's the major issue, major point that we should know. Now, if we'll take a look at the daily chart, we see some other bearish signs. First of all, take a look from the pivot framework. You can see market fails to move above the yearly pivot point. So yes, it has shown this spike, but we should make a discount on the assessment, the treatment of this action, because this was the president elections. That's why this is a bit overextended. But take a look, spike, market has failed to hold inside of this consolidation and drop again below the yearly pivot. Market has dropped below monthly pivot point, and it has reversed down right from the monthly pivot resistance one. And we know that from the pivot framework that if weekly or monthly pivot resistance one holds upward action within the bear trend, it means that trend is still valid. So that is just a retracement. Right now market has dropped right to the daily average sold, and actually guys, here until these lows it has no real support except maybe this oversold area. Next support stands at 1 or 8 probably. Even this will be monthly pivot support 1. No other really significant supports we have. On the weekly chart is probably also the Fib level is 50% of this area, but it has been tested many times already, and we will discuss it in the weekly research with the consequence of the swings of the ABCD patients and what does it mean if market will drop these lows. This will be very interesting. Shortly speaking, if market will take it out with these lows, it should mean that market should continue to move lower. Well, on the daily chart, as I said, from the pivot point, this also means that the bearish trend is still valid. But right now, in today's session, we expect that some minor bounce probably will happen based on this drop and reaching of the oversold condition. What else we see here? So on the 4-hour time frame chart, we've got huge bearish engulfing pattern. We can't call it as the railroad track by the Giordanopoly, because railroad tracks suggest some kind of the outstanding price level. But you can see that this spike was inside of some normal price level. This was not the rejection of the price. This was just reaction on the elections, and we've got this huge bearish engulfing. Usually, you know that bearish engulfing leads to compounding action, so it usually triggers some kind of the ABCD action. So usually the AB leg is the leg of the patient itself, then minor retracements follows, and then continuation. This is typical action with the bearish engulfing. So that's why on the all-hourly chart, as market has reached the daily average sold, we could wait for some upward bounce. Most probable area that market could reach as a result of this bouncing stands at this 1040 area. This is confidence resistance. On the hourly chart, previous, as you can see, previous consolidation, something of that sort here. This will be also resistance. And take a look, that's monthly pivot point. That's why market could show some upward bounce, maybe to this area. But in general, situation stands mostly bearish, and the action that we see right now and the patterns that is forming and behavior of the market around the pivots, significant resistance levels, suggests that previous bearish sentiment and previous bearish trend is still valid. Yes, it was a bit disguised by this spike that has started on Friday last week, since investors were nervous around the elections and speculative games, usual rumors around that. So it was just increased the volatility and uncertainty on the market. But as a result has come, market shows action that tells us that at least currently the bearish setup and bearish trend that we have discussed previously before elections is still valid. That's why we will follow them and we'll be watching for patterns that could be formed on the weekly chart, because they will become probably the major background of our trading on the next week.